conventional ESG context, I think it actually
give the baton to Robin, who is a regulator, but has been a compliance officer at a UK challenger bank. And Robin has Penfold is the partner of TLT Solicitors. Robin, I welcome you and welcome your participant, Nandita. See you. Ryan, where is, I think Srini is there too. And Stephen was there. Thank you. Hi. And Robin, over to you.
Brilliant. Thanks, Dr. Cole. So good morning, everyone. I'm delighted that you've been able to join us this morning for a panel discussion on green finance, unlocking India's sustainable investment potential through partnership. As Dr. Cole said, I'm Robin Penfold. I'm a partner in TLT's Financial Regulation Group. I lead the firm's green finance strategy, and primarily my area of practice is working with financial service providers in the UK in terms of launching new sort of green finance products. So this morning I'm joined by an expert panel who are looking forward to sharing their insights with you on this topic. And so I wanted to start off by introducing the panel. So I'm joined by Dr. Steve Fawkes. Steve has over 30 years experience in energy efficiency, including delivering large energy management programs for corporates in the public sector, co-founding 3 energy service companies, implementing innovative energy services transactions and advising governments. He founded Energy Pro in 2012 to accelerate investment into energy productivity, and the company advises corporates, investors, governments and multilateral institutions on energy services and investing in energy efficiency. EPAL, Energy Pro's JV with the Indian Super ESCO ESL, has invested more than 60 million into UK energy efficiency companies since March 2017. And in 2020 was named as the fastest growing Indian-owned company in the UK. Steve has received awards from the Energy Institute, the American Council for an Energy Efficient Economy, and the India Business Group. I'm also joined by Nandita Tully. Nandita is a managing director at THOMASLLOYD Sustainable Investment Asset Management, based in London. She's been with THOMASLLOYD since 2017 and heads THOMASLLOYD Group's investments in India. In 2018, she led THOMASLLOYD's first investment into renewable energy in India, investing into Solar Arise India projects, a Delhi-based developer and operator of grid-connected solar power projects in India. She is also a group board member and chair of the audit committee at the UK India Business Council. I'm also joined by Srini Sundaram. Srini is an entrepreneur based in London with experience in various sectors such as financial services, insurance, agriculture, energy, transport and healthcare. He's deeply passionate about natural resources, sustainability, rural economy, and driven by his desire to help community in need using technology and finance. He is founder and CEO of Agvesto, a London-based business who are mobilizing insurance and sustainable bond markets, assisting issuers such as corporations, municipalities and state governments. They have a presence in the US, UK, and recently opened subsidiary operations in India to launch insurance programs in agriculture and water sectors. Finally, I'm joined by Ryan Wagner. Ryan focuses on impact investment across Asia and Africa for CDC Group, the UK's development finance institution. Prior to joining CDC, he worked at Bank of America Merrill Lynch as head of private equity for Europe, Middle East and Africa. Ryan started his career as an analyst with Goldman Sachs and spent most of his years with the firm within the private equity group. Ryan earned an MBA from the University of Chicago Booth School of Business and is a CFA charter holder. So this morning, I'm going to invite each of the panelists to speak for roughly 7 minutes on their chosen areas of focus. Please do ask lots of questions during the sessions and I'll do my best to put these to the panelists. We should have lots of time at the end of the session for Q&A. So please do keep questions coming in through the Q&A panel that you see at the bottom of your screen. If we don't manage to cover everything in the Q&A session at the end, I'm sure the other panelists will be very happy with people sort of following up with them individually after the event. So without further ado, let me hand over to Steve, who's going to share with you more about Energy Pro and ESL and his thoughts on India as a leader in energy efficiency. Over to you, Steve.
Thank you, Robin, for that introduction. And first of all, having attended the inaugural event in the Guildhall last year, I'm very honoured to be given the opportunity to speak about our experience in forming a partnership between UK and India in energy efficiency and sustainable investment. And I just want to briefly talk about what we've done and some very exciting developments that we're working on with our Indian partners. As Robin mentioned, my background over a long period, 40 odd years, is in energy efficiency and energy services. And I started Energy Pro in 2012 with the purpose of increasing investment into energy efficiency. And we advise corporates, investors, governments, and multilaterals on developing policies and programs to improve energy efficiency and bring in more investment. We also do market research and develop energy transition strategies, and we carry out due diligence on investments. And we incubate new energy services business models. Our partner, EESL, Energy Efficiency Services Limited, was established by the Indian government in 2009 to drive energy efficiency through innovative business models. And since it was founded, it's grown tremendously, and it has become recognized as a world leader in energy efficiency. Its most famous program is Ujala, which has distributed more than 350 million LED lamps under a pay-as-you-save model, but it's expanded far, far beyond that. It's installed more than 10 million LED streetlights and has programs covering efficient fans, efficient appliances, pumps, smart meters, and now electric vehicles and charging infrastructure. It's the world's largest publicly owned energy service company. And through its work, EESL has saved India over 47 billion kilowatt hours annually and reduced carbon emissions by over 36 million tons. EESL really has achieved incredible results in the last 10 years and is now, as I say, seen more and more as a leader in our world of energy efficiency. I should say a few words here about energy efficiency because it's still widely misunderstood. Fundamentally, it's all about doing the same or more with less energy input. And for decades, we've known there's this huge untapped energy resource in the form of energy efficiency potential. Exploiting efficiency is the cheapest, cleanest, quickest, and most reliable source of energy services we have. And over the years, it's actually contributed much more than renewables, but it's always been neglected compared to the energy supply options. It isn't cool, it isn't sexy, it isn't photogenic. And politicians tend to finish energy speeches by saying, and finally, we should not forget efficiency, but then promptly go away and forget it. These days, energy efficiency covers a whole range of demand-side technologies, including local generation, storage, demand response, and what I'd call pure efficiency like insulation or LED lamps. And all of these are being combined with digital technologies into solutions that cut operating costs for homes and organizations, and of course, help cut emissions. The relative neglect of efficiency has to change if we're to meet our climate targets, and I'm glad to say the situation is getting better. Energy efficiency in the widest sense is now more and more recognized as an emerging asset class. And just to support that statement, even this week, a second energy efficiency fund is IPOing on the London Stock Exchange, aiming to raise 200 million. So things are getting better. In 2016, EESL approached us to help them look at the UK market for investment opportunities. And I have to say, up to that point, we'd had no prior contact with EESL or indeed India. Our first question to EESL was, why do you want to come to the UK when you're doing such great work in India? And it's particularly relevant given it was about the time of the Brexit referendum. EESL's rationale was twofold: one, diversification, and two, learning and adopting new technologies and business models that would be useful in India as the Indian energy efficiency market evolved. We found some suitable investments and proposed a JV, which was created in early 2017. In some ways, it's a strange partnership because the two companies are very different. Energy Pro is a UK SME, EESL is a large Indian government-owned entity. but we've made the JV work through thick and thin because we share the common purpose of improving efficiency. The JV initially made a small investment into some energy efficiency contracts. Then it invested into a Canadian grid-scale battery project, and then acquired a leading combined heat and power company based in Manchester called Edina. The JV deployed more than 65 million into the UK in 18 months. It was also EESL's first international JV, and the acquisitions were the first by the Indian power sector outside India, and therefore naturally attracted attention. And I should say great support at high level, including from the Honourable Minister of Power and his predecessor and the High Commissioners. I'm happy to say in early 2020, the JV EPAL, as we call it, was recognised as fastest growing Indian-owned company in the UK. It's important just to point out why EESL bought a combined heat and power company. One of the leading challenges for India and the rest of the world is how to meet the growing need for more sustainable cooling. A few years ago, India developed the world's first national cooling action plan, which showed that if the market for air conditioners grew at the expected rate, India would need to build an additional 150 gigawatts of generating capacity just to meet the additional peak load from air conditioners. So just to get that clear, that's 150 gigawatts of additional load. So that's equivalent to twice the total generating capacity of the UK, just to meet the additional air conditioning load. Essentially, if we don't solve the sustainable cooling problem in India and other emerging economies and fast-growing economies, we lose the fight against climate change. It's that simple. And one of the many more sustainable cooling solutions is trigeneration. So that's where you generate power, heat, and cold together. And that's something that Edina had a lot of experience of. So ESL is now using Edina's know-how to sell finance trigeneration solutions in India. So we have a nice circularity. India invests into a UK company and uses its know-how to address a major sustainability problem in the Indian energy transition. So having put this together with ESL, we're now working on what other energy transition technologies could we transfer from UK to India, or indeed from India to UK. Our focus is based on EESL's priority areas, which are sustainable cooling, smart metering, and e-mobility. These are the big three, but we're also working on some process related technology that can reduce process heating energy use by 50 or 60%. And we, as Energy Pro, are aiming to catalyze £500 million of investment by 2025. The other really exciting area we're working on with EESL is called convergence. Under the Convergence project, EESL has developed some new business models that take advantage of the rapidly falling costs of solar and batteries. These models combine distributed PV, battery storage, and demand-side technologies such as efficient pumps, LED street lighting, LEDs for homes, and even electric induction cooking and EV charging infrastructure. These models can provide all this in a finance development package at a cost to the DISCOM less than the conventional power supply. The benefits are increased use of renewable energy, higher efficiency through reduced transmission losses, reduced losses for DISCOMs, improved social impacts, lots of good social impact, including improved health and safety, improved indoor air quality, and so on. These are financially attractive projects, and the potential is huge, estimated at 25 gigawatts in one state alone. So we're working with the ESL to develop the business models and build a financing platform to bring investment to them. Funds which can come from public funds, private funds, and carbon finance blended together. Because we believe in impact first, the platform will include impact measurement using internationally recognized standards, which will make these projects attractive to impact funds, and ultimately when enough projects are aggregated means they could be refinanced through green or social impact bonds. World leading is a phrase that's been overused of late, particularly here in the UK, but I'd like to acknowledge India's world leading commitment to a clean energy transition. And I'd like to acknowledge EESL as a world leader when it comes to scaling up energy efficiency. And that's down to the leadership of the Minister of Power and the Executive Vice Chair of EESL, Mr. Saurabh Kumar, who I'm lucky enough to work closely with. The development of these convergence business models and other projects being pioneered by EESL is the next stage in the evolution of the energy transition. They're about remaking the energy industry into a new service-based business model using clean energy, storage, and demand-side technologies together. And as such, they're a major opportunity for large-scale sustainable financing. And we are working with EESL and building on our successful UK-India partnership to bring together the expertise both from India and UK to help bring finance to these opportunities and these projects, which will allow rollout of the convergence type business models at scale. I'll be happy to answer questions later and discuss this in more detail with anyone who's interested in finding out more, who wants to join us on this exciting journey building a more energy efficient future. So thank you for your time today.
Thank you very much, Stephen, and thanks very much for talking about the potential in terms of those business models. Nandita, it'd be great if you could tell us more about Thomas Lloyd and its activities in relation to sustainable infrastructure in India.
Thank you, Robin. Thanks very much. So I'm just going to spend a few minutes on background on Thomas Lloyd, who we are, what we do in India, and then our strategy, and link it back to why we believe that the only way to invest in markets far away is through potential partnerships. So we are a independent specialized alternative asset manager established in 2003. We have since then first-hand experience in managing risk of complex infrastructure projects in emerging markets across the full project's lifecycle for more than 10 years. We're an accredited partner of the IFC, an authorized partner of the European Investment Bank, and one of the original signatories of the United Nations Principles for Responsible Investment. At Thomas Lloyd today, we manage €1 billion in sustainable infrastructure strategy. Now, I feel that my presentation is made slightly easier with the previous session, the stats that were given by both Mukund and Ajit in the previous session. We, as an asset manager, also believe, if you believe in the climate change and the climate change argument, then tackling large markets like India and China globally is where investment is needed. And we started thinking about this as early as 2011. So in our target markets, the way we do business is to invest in long-term partnerships. Currently in our portfolio, we have 2 target markets that we're looking at, the Philippines and India. And in both markets, we have sort of deep and long-standing relationships, which also allows consistent origination and direct access to new projects. In India, we made our first investment in 2018, as you mentioned, Robin, earlier, in a Delhi-based solar energy utility scale developer called Solar Arise. And since then, we have provided capital to build new greenfield projects with them. The way we have done this in the past is that we identify a market, identify a partner, and rather having a strategy of having multiple partners in a market, we are more interested in investing and backing a medium-sized company and providing growth capital to take it up that curve. We then get involved very actively in managing and monitoring and reporting on the investment through sort of tracking of all the metrics of sustainability and impact that these projects provide. So for the solar market in India, what we track and frequently report on is reach of electricity, CO2 emission reduced or saved, and very importantly, creation of local jobs at the sites. So through Solar Arise in India, we have 6 operating projects, 2 in Telangana, 1 in Maharashtra, 2 in Karnataka, and one in UP. Apart from the 6 operating projects, we are currently in the development phase of a very large project, 150 megawatt single site project in Rajasthan. What we have really seen over this period of the pandemic and sort of lockdown in globally is that our rationale for investing in renewable energy was something that came to the forefront of a lot of other people now looking at climate change and investment. So we're very proud to say that our 6 operating projects continued to operate during the lockdown, during the very strict phase of lockdown. They operate because we had at our sites local jobs. People could either stay at the site or be very close to the site. So movement during that period was not disrupted. And with energy being a must-run service, our plants continue to operate. We had 1 plant in development, and apart from a period of 4 or 5 weeks where activity did stop, in May or early June, construction resumed, and now we are probably 4 weeks off commissioning that plant. So I think it's fair to say that we all know about the big numbers and renewable investment. We all know that there is huge amounts of capital available there. I think going back to Dr. Call's point, renewable energy certainly is one sector where there is investment by pension funds and global and sovereign funds. So, but one of the biggest challenges is deal size. Those large funds chase large projects and want to invest in large projects. And it's really a coming together of recognizing that there are technologies or companies on medium size that add so much value that with the right type of not only capital, but sort of strategic partnership and investment and that advice and putting processes in place to improve corporate governance and reporting, these companies are, can be in a few years world-class leaders in their field as well. So that's where we really feel that we make a difference in identifying companies in that space, and not only providing the capital, but the support and the guidance on on ESG and sustainable processes. So thank you very much. I'll pass over back to you, Robin.
Thanks very much, and great to hear about that sort of approach, as you say, in terms of combining both funding and sort of support in terms of developing knowledge in those areas. So I was going to now hand over to Srini, and it'd be great if you could tell us more about Agvesto and the activities in the food agriculture sector and the debt markets.
Thanks, Robin. It's a pleasure to be here. I guess last year we were one of the sponsors of the event, and Mohan, it's nice to see you after a while. So hope everything is going fine. I guess the world changed quite a lot since then, right? Where now we have been looking at climate change as one of the major perils facing mankind, and now we have COVID to tackle with it. I just got a bunch of slides to actually talk through the story on what we've been doing at our end. See if you are able to see the screen. Yeah. Are you able to see the screen?
Yeah.
Excellent. So in a nutshell, we all definitely, focus on, where we are heading as a world. Naturally sustainable development goals is giving a very good framework across various sectors. At the same time, we are seeing this, what I call super forces, which are coming across different directions, whether it can be related to health. It could be related to climate change, which has been one of the major issues facing us. But what does it mean from a country point of view when you're running as a what do you call like a policymaker, or you're a citizen basically in a country? Every system is actually facing different pressures. In many ways, if you're thinking about food and water as one of the sectors of GDP, They are interconnected in many ways. Everybody basically consumes like food and water. At the same time, we also consume air. So in many ways, SDG normally talks about not necessarily at the national level, but more like what are these systems that are interacting within a given country. And it is quite important when we do talk about sustainability, we look at all the systems actually working in tandem. That means, you obviously have a good trade-off when it comes to policies on what does it mean from a no poverty goals point of view at the last mile and last citizen. At the same time, what does it mean from an urbanization point of view? That's a very hard challenge if you're running a country or if you're running a municipality on a local level. And that's basically setting the problems. Naturally, India, from its own growth story, we have had tremendous growth over the last 2 decades compared to where we were in 90s, and part of it down to urbanization and growth. So there has been very proactive policies of attracting investments, and we've seen a lot of growth driven by technology compared to how the country used to be, which is very commodity driven back in 80s and 90s. However, if you look at the trade-off on SDGs, on the right-hand side, you always have issues related to climate change. Many parts of India actually is seriously lacking water. And whether you talk about clean water or whether you talk about water, and the biggest consumption of water actually goes to food production from an agriculture point of view. And this imbalance basically that we created in the climate system naturally means some parts of the country naturally have arid climate and it's getting worse. So the groundwater levels are depleting. It's the same problem we're seeing in the US as well, whereas the other parts actually have severe flooding, which happens on a year by year basis. So if you are a municipality or a state government, you're balancing on one hand the urbanization growth targets, which is what you're seeing on the left hand side. On the other hand, you have basically these frictions that are coming across different parts of the SDGs. But really, you're tackling basically in a way the budget needs to go so that the person in the middle actually can live in a peaceful manner, right? That's the challenge that we're facing it. So what's our role as a company? We always believed, the whole explosion behind data and technology could help you to solve certain problems, but the problem need to be well defined in any given sector. On one hand, you basically are looking at, what's the role of insurance market to actually transfer some of these risks that you have in the system. On the other hand, you have the investment community who needs to actually move the capital at the right cost of capital. Now, most of the times when you do talk about capital markets, certain markets actually have a very good diversification where you have a functioning equity market, whether you talk about the venture capitals or you talk about private equity or a large family offices and pension funds. And then you also have the fixed income market, which is the multi-trillion-dollar market, which is functional in many markets that allows you to attract the capital for the right purposes. It also allows you to set the rate of expectations from an investor point of view, where fixed income can give you anywhere between the investment grade and non-investment grade. So you can actually walk across different risks and different return profile and then specifically target opportunities. However, in India, most of us here know that the fixed income market is still very early days when it comes to the infrastructure and the development compared to how we were in the past. So many markets have a multi-trillion-dollar fixed income market, whereas in India, we're still thinking about sovereign rating not being AAA. That kind of basically tracks all the way down to the last mile fixed income rating. That means, if you are attracting debt financing, you're talking about 10 to 14%, whether you go via ECB route or you go via FPA route. But those debt capital is not available for every single sector uniformly because A, it's hard to produce a return. That means managing the investor appetite to the issuer basically is a very hard task for people in the debt intermediation point of view. So we're primarily looking at both sides and see, there needs to be equilibrium and balance between how the capital is flowing. At the same time, what risk that you have that could potentially affect your default, which you can transfer to the insurance market. And that is quite important from a sustainability point of view because, insurance market, for all that we know, it is seen as a downside protection ultimately for any given asset, whether you talk about land or a solar, or you talk about infrastructure projects. So having these two regulation basically is very good. At the same time, these two regulators have to work quite closely in tandem, which is what we've been looking at from a business point of view. Just a slide on where we operate. We have launched insurance products in the US market with capacity from major insurance companies. It's about 7 different states. If you're a farm business, you can come and get protection through the platform. In the UK market, we've been working quite closely with a number of insurance companies. And we launched this program, Icebreaker One, as a consortium, which is backed by the government. It is primarily targeting net zero financial products. So in essence, UK government has a commitment by 2030 to actually get net zero carbon in various sectors. Now that means obviously, you need to have insurance role to be pivotal, because like India, UK also has a lot of flood risk problems in the Western coast. We also have a lot of dry water availability problems in the summer in Norfolk and all the other arable areas that we have in the southeast. So when it comes to any given sector having a net zero carbon, what we're not saying here is a sector itself basically has to become net zero carbon as opposed to every individual become net zero carbon. They are two different problems basically. That means in sectors such as agriculture, livestock would continue to emit, but at the same time as a sector, if you want to get net zero, there could be some regeneration you can do on the arable side that will balance basically the emission that comes out. And in India, we just started basically our subsidiary operations in Q2, and we are looking to roll out our programs for Rabi season for the agri-businesses front. Typically, from a farming and food production point of view, for those who are interested, you as a farmer are battling basically on the seed to harvest cycle, which is predominantly the production cycle. But with COVID, what really highlighted is the people who are in the value chain, which are the storage companies, the processing companies, and manufacturing companies. They convert basically what comes at the farm gate to something that you and me consume on a daily basis. Whether we buy it through a supermarket, where we directly buy it from companies, who are in the value chain. And they do need to have coverage against, anything related to climate change on the crop insurance side. At the same time, on the delivery cycle, you could have disruption. COVID was one disruption, but you could basically have weather events which could wipe out basically the crop actually reaching to the market. So there's a lot of issues on the logistics sector which farmers are grappling with. So the new policies by government have clearly highlighted the farm producer organizations to be much more behaving like a commercial company. At the same time, you don't want to kill someone in the middle, whose livelihood is depending on storage and processing. So it is important to have the balance between who's the off-taker here, which is consumers in the urban area, and also who's basically sitting and providing in the value chain. So we have looked at coverages by working with the local insurance companies, and also providing some reinsurance capacity by partnering them with the overseas reinsurance companies. And that's effectively one part of the problem we're looking to solve. On the other side, from a sustainable bonds point of view, whether you are a state issuing, you're a municipality or an urban local body or a private sector, there are a number of things that needs to happen before the bond basically becomes feasible in an overseas market. We have highlighted about pricing. We also talked about, what type of credit enhancement that could potentially happen before a bond actually comes to the market. And actually, real estate and energy has a very good traction when it comes to the bond records. But if you are tackling a resilience-focused bond in a given state, or if you're tackling water-based bond, it is not straightforward because those return potentials of those projects basically doesn't have a very clear path to profitability. So that means if you're a debt investor, you're always thinking about, by default, you'll be increasing the rate, or you probably don't touch the market at all. So what we are basically looking at is whether a certain project would qualify for a bond, or it can still remain as a project, but it can be project financing at a $10, $20 million ticket, as opposed to everyone actually getting behind bond is the only way to access debt market. So a couple of examples, there's obviously a recent announcement on UK-India water partnership, and Clean Ganga mission has basically got a good partnership with the UK water body. And we are involved in two areas. One is actually looking at if there is a water finance instrument that will come in the form of a bond or any other type of instrument, how you're thinking about selecting the candidates, which would help you. B, what kind of risk transfer mechanisms that you can actually put, whether it's an urban local body side or it's a rural business, transferring this water risk, whether it's down to flood or a drought or a heat wave, effectively means the rural businesses from a farming side and also the kind of urban local bodies can manage this water risk better. And if you are actually combining this kind of risk transfer mechanism, whether it's insurance or any other type of mechanism, with the bond issuances, then what you're really saying to the investor is, yes, there's obviously every capital basically has a default risk associated with it. At the same time, if you have a back-to-back insurance program set up for this bond instrument on a multi-year tenor, it becomes a lot easier for you to pinpoint where the kind of default risk that could come from on a project level, but I have a bespoke insurance program that could help you from an investment point of view. Which means what you are thinking about is you have two regulatory bodies, you have two separate instruments, but they do work hand in hand in a systemic problem like water. On the agricultural side, project financing clearly talks about, we're not thinking like a bond basically on the agricultural front, but it could be a transaction size where, a simple $5 to $10 million ticket could help you to actually serve working capital requirement at the farming level. So that means it could be a line of credit from an overseas investment point of view, which could go into India, and this line of credit could help you to actually provide the working capital for an FPO, farmer producer organizations. And we also set up the back-to-back insurance program for that particular FPO, so that if you have 100,000 farmers underneath, you can actually get the credit and the insurance in a single pack. So the last message I would like to leave is, why UK and India are best placed to actually have this strong access is, UK got its strengths from a legal and regulatory point of view and have a very good functioning capital markets and insurance markets. And, having these kind of, the win on this side, if we can actually tackle the problem on the India, which is all about scale, you have the right two foundations where India bring a lot of STEM expertise and the technology and the data aspects. UK market could bring capital markets and insurance, but if you have a very strong axis which can support each other, you can truly create a sustainable economies on both sides. That means there's a large amount of export which will come from India. We all love to eat mangoes in the summer. At the same time, mango is one crop that we are actively looking at in Karnataka and also in Gujarat. It's very easy to actually pick and choose, what is that we need in both countries and mobilize it. So that's the journey we are on. Plenty of food for thought, but plenty of work to be done as well. So I'll leave it at that, Robin. Yeah.
Thank you very much, Srini. It's really interesting to hear about sort of the role of insurance, in particular in helping to achieve some of those sort of net zero targets that have been set. I'd now like to hand over to Ryan. Ryan, it'd be great if you could tell us more about CDC Group and some of its work in India in relation to climate change and sustainability.
Sure. Thanks, Robin. Can everyone hear me okay? Today, when people hear CDC, they think of a little bit different institution, the Center for Disease Control, but we're a different organization than that. We've been the UK's development finance institution for quite a few years, over 70 years, since 1948. And we've been investing in India since, really about 40 years. Today, our mandate is exclusively South Asia and Africa, and we invest from our balance sheet. The balance sheet is just over 5.5 billion sterling. And this is really primarily in developmental sectors. So that'll include healthcare, infrastructure, financial services, education. And within Asia, the vast majority of our portfolio is in India. Overall, more than a quarter of our balance sheet is in India. And our largest sectors of investment have been in financial services and infrastructure. And really our deal sizes have been anywhere from 5 million to 100 million in size when it comes to infrastructure. We invest through direct equity, debt, and quite a bit actually through local fund managers trying to build the private equity market in India. And a lot of specialization has come over the years in infrastructure in various forms. Our focus has been on returns, development locally, job creation, and overall impact vis-a-vis the sectors that we engage in. Over the years, our infrastructure investments have been really both physical, so roads, airports, transportation, logistics, and then also in power, and that's been in generation, mainly in renewables, and then more recently in transmission and distribution. Today, we're really focused on climate. We've made a commitment to more than 30% of our annual commitments or our budget going into climate initiatives in both our geographies of Asia and Africa. And we really feel this is important in India, both on the mitigation side, but also on the resiliency and adaptation side. Some areas that we focus on have been renewables and generation solutions as we consider it. So this might be wind and solar. While we've done physical in the past, we've also now found areas like C&I smart grids, other areas that are more in the value chain of power and generation to be areas that we want to focus on. But then also related to climate in India, we're looking at e-mobility, so things like storage, batteries, clean transportation, resource efficiency like waste management, water management, emission capture and control, energy efficiency and servicing, so things like storage, asset management, and really infrastructure to the infrastructure sector. We found this is really an area that could use additional development and certainly capital. So climate solutions, while we've seen quite a bit on the mitigation side, mainly on the solar and wind side, and that's been apparent over the last number of years, resiliency and adaptation have been slower to develop, and really solutions that we've seen perhaps being developed elsewhere are only now starting to get capital and starting to move into India in some way. So while we've been focused on trying to develop those solutions, it is taking a bit of time to get there. And then on the mitigation side, I mean, there's been a lot of planning and a lot of promise, but what's been completed is certainly perhaps behind plan. And so we have been trying to make connections both from our infrastructure policy and our infrastructure strategy, but then also mobilizing additional capital. So bringing other, as mentioned earlier, another panelist mentioning, bringing in pension plans, trying to use our capital in some ways to mobilize other investors. One project that we're working on now is a combination between the National India Infrastructure Fund, British Petroleum, the UK Foreign Office, and then CDC. And really this is a platform sort of beyond renewables, looking at energy servicing companies, building out platforms, and really thinking how to bridge that gap between some of the smaller and mid-sized deals to then creating larger platforms, rolling things up, and really looking at solutions at scale. So this is really an initiative we've taken on over the past couple of years. As we approach COP next year, I think this will be rather important as we're looking to do a number of things before that event next November. And some of the critical factors that we're looking at as we're building these platforms or working to launch this is really, as we make an investment, is the company or is the group that we're working with able to work across the value chain? Are they able to bring different players together? Can they work with the government and policy enablement to make things happen more quickly, and thinking about business integrity and environmental and sustainable solutions? Can they bring those pieces together? And what kind of partnerships can they deliver in terms of everything from financing to end-to-end delivery? Areas like diversifying their customer base, so not only having the government involved, but also the C&I market or more of the private sector, and then really technology and innovation. So what new things are being brought into the mix? So I think this is very important in terms of adopting technology locally by very smart technologists bringing solutions to the market, as well as from international players. And then really this whole idea around how do you monetize this over time? So looking at M&A and then the capacity to roll up various projects, but then also later for exits, and how do we eventually transact and roll this into pension plans and other investors that are interested in the market. So why don't I stop there and hand it back to you, Robin.
Brilliant. Thanks very much, Ryan. And interesting to hear what you say about the kind of role of platforms and sort of bringing different participants at different points in the value chain together. We've got about sort of 10 minutes now for Q&A, and we've had lots of sort of questions coming in during the session. But if anyone does have any other questions they want to raise, please sort of fire them into the Q&A box. I think the first question is one for Steve, which is, India is an enormous and diverse country. Are there particular geographies that you've targeted and found success in India?
Sure, good question. clearly it is an issue. I think we ourselves are more guided by EESL and their efforts. EESL are operating nationally, but I think it'd be fair to say they make more progress in certain states. But we personally don't have a sort of geographical focus. The convergence projects that I've mentioned are being piloted in Maharashtra. They're sort of leading the way on those. But other than that, no geography focus.
Thanks, Steve. So next we've had a question on green bonds. The question is, what's holding back Indian power companies raising dollar green bonds? There are many potential Indian renewable projects that could benefit from raising green bonds in international markets, but the issuance rate lags competitors in China by a large margin. Is there anyone on the panel that would like to pick that question up? I don't know whether Srini or Ryan, you've got a particular view on that one.
We haven't done much in the green bond space. I mean, we've looked at development impact or outcome-based solutions, but thus far that's been more education and healthcare rather than infrastructure. But you probably see where it would apply to infrastructure at some point.
I mean, maybe Robin, I can just add one comment on the green bonds. I think it comes back to what we've been discussing about size and scale of participants in the market. So the Indian market for renewables and those who could access the international green bond market is quite polarized. There are a handful of players, 4 or 5, etc., who are of the size where it would make sense to do a green, or it could make sense to do a green bond issuance on the international market. The rest of the market is pretty fragmented. It's fragmented between small and medium-sized players, between corporates who have part of the strategy in renewals but are now the main businesses, etc. So for those type of companies and corporates, accessing the international green bond market just doesn't make sense. As now, obviously, consolidation happens and there's roll-ups that Ryan was talking about, there will be more companies that get of that size that then can access. But there is, there are 2 ends of the spectrum at the moment, and it's only the large players who could think about accessing green bond markets.
Thanks very much.
Robin, can I add to what Nandita was saying?
Yes, of course, Dr.
Actually, Srini was reviewing this whole green bond thing last year. But what Nandita said, there is a demand for the green bonds, but it varies very much. It's diverse, and it's the sizes are very small, and the structure of issuing the bonds is kind of missing. So we are exploring further, but without success so far. But that is one area, High Commissioner, if there is some way we can get some brains together, a small task force to see how we can do it. Nandita is very much in the middle of that, and so is Srini and others. And we can use their expertise, but there's a demand and there's a potential, and there is a possibility of issuing these green bonds, but somehow we're not kind of succeeding in that. So I would really like participants here and see how we can put our heads together to take it forward.
Yeah, if I may add one other point on related to renewables in general. It's not just in India, but throughout in various jurisdictions. There's a lot of interesting kind of developments happening in the wind power, solar, and to see what projects are really becoming sustainable. So there, smaller companies who are doing in few megawatts capacity, there has been issues about them going into bankruptcy in certain parts of the universe, wind power, without naming the countries or entities. So from an investor sentiment point of view, while renewables actually works really well from a concept and theory point of view, practically getting them to an aggregated level to a large issuances, there's still a lot of questions to be answered. The second point also is down to the off-taker price, which becomes very important. Whether you are doing a hydropower or you're doing wind or a solar, the price determinant, if it's a functioning open market traded price, then there's a lot of comfort for investors to say that's the price volatility that I'm looking at the end of the 1 year, 2 year, 5 year, 10 year period. But if you do have large volatility in the price that comes out, is it down to the policymakers actually changing certain things during the course that actually puts the market off the boil, and that becomes one of the other reasons why people look at a certain market and people say, okay, if the sector basically is stable, then I have my ingredients to actually go and invest for a long-term 10-year territory, even if it's $100 million bond. But if there are these risks sitting on the political side or on the policy side or on the market side, it's very hard to actually hedge them on a year-by-year basis, because that could wipe out the entire transaction cost you have. And these are like practical ways of like looking through the issuances. One other is the currency in question, which is, against dollar, INR has had a depreciation, if you look at the market. So what currency at which you do naturally will add the FX cost as well, which I highlighted in the last year as well. Typically, we're looking at like 3.5% to 4%, basically you add on top of what you have in the INR territory. So whether you do a euro denominated or dollar denominated or INR denominated bond, the question changes based on the FX volatility as well. So that actually gives investors a lot more headache to support the cost. These are the kind of barriers you see it on a pragmatic issuance point of view, but on a larger territory, if we can deal with some of these elements, it's a lot easier for them to come to the market and say, here's the issuances, these are the number of projects underneath. So you're not really talking about the size of the problem or the FX risk involved. So that would probably be my observation.
Robin, could I just add something about scale?
Yes, of course, go for it.
Sure. I mean, scale has been talked about a lot, and it's true in renewables, but it's even more true in our field of efficiency, because projects tend to be quite small. And that's where you do need these vehicles that can aggregate projects, develop projects, use standardized techniques to do that, and also build capacity. And there are examples. I mean, ESL is one example. There's also examples which are now called super ESCOs, 2 examples, one in the UAE and one in Saudi Arabia, which are very good at developing projects using private sector ESCOs to actually implement the projects, but they develop them and bring larger amounts of funds together and aggregate. And it's that sort of new type of vehicle that's needed for a lot of these kinds of projects. So there are some kind of positive signs and models around the world to look at.
Thank you, Steve. We've got one question, which I think we're running up against time, so maybe our final question, but for the panel as a whole, and I think this builds on some of the discussion that was had just at the last session, which is what are some of the examples of specific governance concerns that hold back offshore investors investing in the Indian market? Where do the misalignments lie among Indian and international standards for green financing? I don't know if anyone particular on the panel wants to sort of come in on that as a start.
Perhaps I can kick off. I can give a very specific example. We've been speaking to certain municipalities, who traditionally has been finding it very hard to come to the market and then raise money like a corporate bond market per se. Governance basically in this part of the world is still an ongoing exercise. You have the regulatory structures to say, okay, if you are talking about sustainability or a green bond or any kind of green instrument, what is really the type of disclosure that you need to do at the board level, and also what is that you need at the organizational level. That's from a TCFD point of view, there's still been a lot of ongoing work to take it to the corporate world and then to the SME world. If you translate that to an emerging market, for example, municipality as a good example, governance basically can give a good idea about what policies you need to have in place, from an entity level. At the same time, the current working practices of municipality, it's a cash-based accounting versus an accrued balance sheet-based accounting. That means obviously from a data collection point of view, you probably don't have enough data to report. So while the reporting standards actually require certain clear principles, it's hard for an entity to do simply transform their business model, just like a startup can do. So there's an element of education needs to be done in terms of typical ESG reporting that happens in the European market. What's the best in practice? However, don't actually try and go and impose it in the Indian market straight away, but understand where the market is. Agriculture may have a completely different readiness level compared to an energy or an infrastructure real estate. So appreciating where the kind of current market is and then see what we can tailor to the Indian market is much more appealing, rather than, this is how the investment landscape looks like in the Western world, and you need to actually match them, which we found it very, very hard to actually mobilize at the entity level.
Thank you, Srini. Is there anyone else on the panel that wants to share thoughts on that one before we close up?
And the one area for us that obviously comes up quite a bit when we speak with other investors is where the ESG, when you're dealing with infrastructure and specifically with promoter groups and reputational risk. So that's an area that has been obviously improving, but still when things are subcontracted and you're dealing with construction sites and labor issues, there's a lot of risk that's involved there, and entities that are subject to public scrutiny are sometimes a bit put off by the potential risks that may bring. So that's something that we hear quite a bit from our other European counterparts and the development finance world, but then obviously some pensions as well.
And just to add to that, one point that Ryan just made, I mean, he's absolutely right. I mean, infrastructure is a complicated process, and whether you're dealing with water projects or municipalities or large solar farms or wind farms, etc., you have to dig down into the supply chains, the subcontractors, land acquisition, which can be tricky, all those sort of issues, and having that look through of ESG to the sort of ground reality can sometimes be challenging in India, and any emerging market, for a fact. It's not just India is alone in that. So I think the way that things will change on the ground is to have more investors who are kind of involved in that, in putting processes in place, best standards, but it will take time because you have to drill down into all supply chains, subcontracted, and frankly, India itself, for example, land acquisition in one state is completely different to somewhere else. So it's not a one size fit all sort of policies that will be needed.
Thanks, it's really interesting. And so I wanted to close today by thanking the panelists for an excellent discussion and for those really interesting insights. And thank the audience very much for joining and for all of the questions, and hand back to Dr. Call.
Thank you, Robin. Thank you, the panelists. Thanks for chairing the panel, and thank you, Nandita, Srini, Ryan, Stephen, for contributions, and we'll continue the dialogue. And now we have a concluding part. High Commissioner, I would request you to last word, but before I give you last word, I'll ask Richard Heald to make his concluding remarks. Richard needs no introduction to this gathering. He's been the group CEO for UKIBC for the last 10 years, but now he's the group chair, and he is very much involved in UK and India trade and investment. Richard, we know the issues of trade and investment between India and UK and cross-border, but today the ESG and sustainable investment and finance makes it even more kind of challenging and difficult to look at the mechanisms, the growth, the size of this particular cross-border investment. And so in that context, your insights on the UK-India investment flows would be very helpful. So over to you, Richard.
Mohan, thank you very much indeed. I have to say I've been listening to the discussion since 10 o'clock, and I think it's been quite inspirational. One of the things that has really struck me is something that Srini, if I may, came up with in his talk when he talked about the innovation, expertise, technology, and India's scale, highlighting why collaboration between India and the UK is and should be sustainable going forward. I thought that was a really interesting kind of insight. But I'd like to thank, obviously, the Indian Professional Forum and you, Mohan, for pulling this together. I'd also like to compliment Her Excellency the High Commissioner and her breadth and ambition into COP26. I found the comments that you made in relation to the responsibility that we bear for future generations absolutely spot on. The International Solar Initiative that you highlighted and the UK-India partnership there is something that I think is a good model which we should take forward. And I also was impressed that your vision for the Green Growth Energy Fund, 750 million investment from BP at 70 million just coming in. This all points towards a movement in the right direction. And I also listened, of course, to the comments of the Lord Mayor in his highlighting the position that the City of London can play in this area and or the already established relationships which we can build on. You know, the fact that 80 green bonds are listed on the LSE and the FDI in the green energy sector, these are areas where we should be leveraging the financial expertise of the City of London. Innovation, as I said, is absolutely key. And I think that if you look at the motivations of our two countries, of both India and the UK, then it's quite clear that our motivation is in the right direction. The UK was the first major economy to put into legislation its ambition to be carbon neutral by 2050. And India itself is committed to producing 40% of its installed capacity to be non-fossil fuel sourced by 2030 and to reduce its CO2 emissions by 35% relative to 2005 levels by the same date. And these are statements of intent, clear statements of intent by both our governments, which indicate to me that there is collaboration there that we should be working towards. At the same time, you know, the bill for all of this is high. India needs to invest something in the region of $450 billion a year over the next 10 years to meet its urban sustainability and renewable energy target. And this includes 30 billion a year on energy. That's excluding investments in grid infrastructure, which will significantly increase this amount. The current model for such investments is heavily reliant on banks and NBFCs. However, these sources are under strain already and unable to meet the need with NPAs at around about 10.8%. And this is the sixth largest banking system in the world. You know, that combined with the fact that infrastructure accounts for 36% of bad loans means that there is a significant problem that we need to address. And so much so that the lack of capital has meant that large-scale costs of borrowing have increased by 1% for green projects. Now, ESG funds, we've heard that there is demand out there. ESG funds account for somewhere in the region of $31 trillion or 32% of global investment pots, but only 0.1%, 25 billion of that 31 trillion is invested in India, despite its position as the 6th largest economy on the planet. And we heard the debate that in a few minutes ago, the good question about how can we increase this share of the pot. The size and scale for participants in the market is quite clear. The demand is there, but we heard that the market is fragmented. Consolidation and roll-ups will occur, but that's a medium-term solution, is it not? I think that the shout out involving the High Commissioner as to how we can probably bring together best minds in order to think about how we can solve this problem is I think, pressing and immediate. UK companies' footprint in India is one of the largest. We have more than 600 companies in the UK. I have to name check THOMASLLOYD, who are a member of the UK IBC and CDC as well. But also other more corporate members are there in spades and are looking at developing ESG footprints and investments in the country. Shell, interestingly, are tying their executive pay to carbon reduction, and RBS is starting to link its investment strategies directly to the United Nations Social Development Goals. UK IBC itself, my organisation, has recently launched our socio-economic impact platform, showcasing the positive impact, social impact the UK companies are having in India, in addition to the economic benefits. And we're doing this in partnership with the United Nations Development Programme. I come back to Srini's point about the combination of innovation, expertise and technology on the one side and scale on the other makes the partnership between UK and India so exciting and with full of so much potential. I think the panelists were inspirational and terribly insightful in their comments. And I think that bearing in mind the enthusiasm and the opportunity that we have going forward, Mohan, I really think that this is something which we should be focusing on. And I would hope that with COP26 and with the EFD on the horizon, there are two elements here which we can really focus on to try and bring together the ideas that we've discussed here today. So thank you very much, Mohan. Really, really good session.
Thank you, Richard. Thank you for those comments. And thank you for summarizing the main points that we discussed today. And I think we have the attention and of commitment of the High Commissioner to take it forward, and we will work with her and our officers to see how we can build the best brains together who were today. And we will be glad to work with UK IBC and other High Commissioner, your officers, to take it forward. I want to take this opportunity, High Commissioner, I will come to you, but before you have the last word, I want to thank you and your officers, and particularly the Economic Ministry of your office, and Manish Singh and his team. And Manish, I believe, is maybe leaving us and going home, and we are very, very grateful to him for his support and for his leadership in these areas. And so a big thank you for him. We would have given him a big reception, but you know, he has to come back to London for that. So, and thank you for UK IBC, Edelweiss, TLT Solicitors, City of London, Global Investment Advisory, and most all the participants and the speakers to contribute to this debate. We will try to summarize and we will take it forward. There are a lot of opportunities, but there are a lot of constraints too, but we'll take it forward. High Commissioner, you're the last word.
Thank you very much. I do agree that losing Manish will be not so nice, but he will go on to do more important assignments. He's here beside me as my colleague Anita Banwal, and I'm Anima Banwal, and I'm most thankful to both of them. The discussions this morning have been beautifully summed up by you, and I thank Mr. Richard Heald for his comments. We have all taken notes. I have to compliment you on the selection of a brilliant panel, and also to thank the panelists for their very, very insightful and useful suggestions and recommendations, which we've noted. I think it would be a very useful exercise to write down the main recommendations, which we will then share with our 9 ministries back in Delhi to see how we can answer some of the urgent asks of this get-together. We also are very keen to have good, at least one very, very good deliverable, very, very good outcome from this initiative for the visit of the Prime Minister to India, the Right Honourable Prime Minister, Mr. Boris Johnson, whether it's a virtual visit or whether it's an in-person visit. I think something inspired by the father of our nations, something on sustainable finance would be so apt. An India-UK partnership in this sector, an institute or an announcement, something that we are going to do together in a solid way. So many of the ideas have been inspiring today, and you can be sure that we will be in touch with you on taking them forward. So once again, Dr. Kaul, thank you very much, and a big thank you to all the distinguished panelists.
Thank you and goodbye to everybody. Thank you. Namaskar.